Hello and welcome into the KE Report. Chad and Corey here, getting an update from Sean Brodrick, editor of Wealth Megatrends and contributing analyst to Weiss Ratings Daily. And we'll put a link below so you can follow along with Sean's work over at Weiss Ratings Daily, and you can see all the different newsletters that he provides. We do sometimes talk about Resource Trader on here because you talk about the commodity stocks in that publication, but you also have Super Cycle Investor. A lot going on in the market, Sean, but I guess front and center is precious metals that continued to move higher in the gold price. As we are talking today, the gold futures are up at all-time highs. It does seem to be lifting some of the stocks, but maybe not the reaction investors were hoping for in the precious metal sector. What do you make of the continued ratcheting move higher in gold and the gold stocks still needing to play catch up?
Well, yeah, certainly gold miners as a group are cheap. Some look very cheap to me. Especially when you consider the way that their profit margins are just expanding right now as the price of gold keeps making fresh new highs. And as bullish as I am on gold, and I'm quite bullish, I'm more bullish on silver. That just popped above $32. These silver miners have just been beaten down into the dirt. And so many of them are dirt cheap, especially ones that I've recommended to my subscribers. So I'm quite happy about plenty of this. There are some stocks that I still wouldn't buy. Those stocks that tend to keep issuing shares over and over again, not for any nefarious reasons, though some are nefarious, but mainly because they have to either make acquisitions or keep the lights on or you name it. So you have to pick and choose. You have to be careful. But I think there are some real screaming bargains in the whole precious metals group right now. And so that's one of the things that I'm steering my subscribers toward.
So, Sean, for the silver miners, then, are you simply looking at some of the big guys that are generating better cash margins here, or are you going down into some of these smaller ones that could finally be turning a profit? But to your point, they also might need to go back to the market and raise some money.
Right. Well, I like producing miners anyway. That's just the way I am, though I am starting to look at some stocks that have a shorter time frame than others. I still don't like strict explorers, though prospect generators. Actually, I was just looking at a prospect generator this morning. It looks nice, but I think we can move down the scale and not have to stick with the biggest producers right now because most of them have had a nice move. If you want to look at like Agnico Eagle Mines and stuff like that, that's trading at an all-time high. Some of the bigger ones, like say Newmont and Barrick, are not. So you can look at those. But if I was looking for real value now, I would move down the scale. The kind of things I like are those companies that just have a couple mines. I am hesitant to buy a stock that has just one mine, but I've done that recently because you're always sweating. What if something goes wrong at that one mine? But yeah, I think you can move down the scale, look for good opportunities in these smaller companies because they were just so unloved for so long. There's some real value there. And I think you could easily get stocks that in the next year will give you 100% return or more.
Well, Sean, as we get into the end of this week and beginning of next week with gold at all-time highs, we're getting close to closing up the third quarter. And I'm just curious to get your thoughts on, do you think more generalists and analysts are going to start paying attention to the gold producers just as a group? Because the margins are the fattest now that they've ever been. We got about $1,000 margins. Most costs are 1,500, 1,600. We're north of 2,600 as we record this. So with that $1,000 spread, they're literally printing gold and silver money. And I'm surprised that the GDX, which is a collection of producers, can't even seem to break above the 2020 high when the margins were only 800, much less the 2011 high when it was back at $65 and some change. We're trading at 41 and some change on the GDX. What will it take to get more interest into the gold producers as they're clearly got better balance sheets now than they've ever had and they're making a lot of money?
Yeah, well, you actually touched on it, which is that Wall Street has to wake up. I believe they will. But if you look at the average gold miner margins, in Q1, they were $643 an ounce. In Q2, it went to 910. And as you just alluded to, this quarter, it's going to be well over 1,000. So that is some nice profit growth right there. And so we also saw Wall Street close things like, commodity desks, stuff like that. They might have to reopen those, or else those analysts, which maybe follow smaller companies, will start to follow small gold miners because the growth potential and the takeout potential, which is something else we have to talk about, they're all very good for these companies because we know how the big gold miners increase production now, which is that they buy up smaller miners, or at least smaller developers, explorers, stuff like that, but often smaller miners too, just so they can immediately add that to their production count. And so that means that a lot of these smaller miners, I bet there are boards of these smaller miners praying that they don't get taken out in the next 3 months, because 6 months from now, they'll be able to get taken out at much higher prices. And we saw that same thing during the last gold bull cycle, where these small companies would actually put out no news because they didn't want to be taken out just yet. They wanted to get to a certain point and actually have the kind of stuff that would just drive their share price much, much higher. And we're going to see the same thing there just because of the undervaluation across the industry right now.
So, Sean, too, this whole concept of M&A or even business combinations, I almost feel like sometimes this is a bit of a chicken and the egg type of conversation where we want generalists to come in, but sometimes generalists need higher market cap companies to actually move in to build and add to their portfolio. M&A, business combinations, is it size? Some of these small market caps, is that what's holding back some generalist investors?
Probably. Also, many so-called generalist investors aren't used to dealing with hard assets anymore. They aren't. I mean, what they cover is tech companies, which pretty much create products out of thin air. I mean, there's a lot of sweat, there's a lot of effort in it, but basically they don't have to move an ounce of dirt to create their profits, and they can create infinite product if they want to. So that's a very different beast to actually try and just actually calculate how much it's worth compared to a gold miner or a gold explorer or a gold developer. And also just the time frame it actually takes to get a mine going. I think many generalists would probably lose interest or else think, you know what, this will continue on for a few months, then it'll stop. And so because they think it'll stop, they won't get started in the first place. But that's what they don't realize. I know you probably had people on talking about the Fed rate cuts, but over the next 3 month to 6 month to 1 year time span, we're going to have more Fed rate cuts. That's a given. And so if you saw Fed Chair Jerome Powell speak, he was incredibly dovish when he spoke last week. And there was only one dissenting vote against a 50 basis point cut. They all seem to be on board with this. And if there are more rate cuts coming, the more rate cuts we have, the more that chips away at the value of the US dollar. Since the US dollar sits at the opposite end of the seesaw of pain with gold, as the dollar goes down, and it will go lower, the US, then we see gold go higher. And like, I could make a long list of things that are really going to weigh on the US dollar, including the fact that neither side of the political aisle can possibly figure out how to balance a budget, and they aren't even going to try. But there's many reasons for the US dollar to go lower, and that makes the hard currency, gold, go higher. I mean, that's just the kind of way the world works. Many people on Wall Street, as I said, are not going to be able to grasp that. They're only thinking about tech stocks now. Tech stocks work. They're only thinking in the shorter term time frame. They don't think about the time frame of long-term supply and demand in gold and bringing new mines online and how long that takes. So it's a very different beast for them. So I think there are some on Wall Street that will never get around to covering this stuff, but enough will, say in the next 6 months or so, that it's going to make a real difference. My target for gold, I've raised, by the way. I think I've talked to you a few times about my $3,000 price target. My target is now more than twice that over the next few years. We are going to see gold go much higher for a whole bunch of reasons, some of which have to do with China and India, but some have to do with the fact that our own currency is in some trouble. That doesn't mean the end of the US dollar. I'm not a doom and gloomer, but I think its value is going to go lower, and that'll make gold more expensive.
Well, Sean, I'd love to weave silver into this discussion a bit further. You mentioned you're positive on silver. Usually silver will catch up to the trade in gold, but gold has been breaking new all-time highs for a while now, and silver is still nowhere close to its $49 to $50 high. It is making progress today as we speak, but do you think that the countercurrent, because it's an industrial metal and there's potential economic contraction or weakness on the forecast. Is that weighing down silver, or do you still expect silver to play catch up and kind of blast higher here?
I think that was weighing down silver, and it could in the future. But one thing that's helping silver today, and it's up more than 4%, whereas gold, even though it's making a new high, isn't even up a full percent. One thing that's helping silver, and it's just this whole thing like everything's connected, right? China is making a serious effort to restart its economy. And so that includes all sorts of things. China is a place where there's a cultural affinity for gold and silver. And also, silver is used a lot in like solar panels, and China is leading the world in the production and installation of new solar panels. And that's a big source of demand for silver. So I think silver has been held back. We'll see how this China effort to jumpstart their economy goes. Maybe it'll work out, maybe it won't. I tend to think they won't stop until it does work out. So as they put more effort and more money into doing that, that should help silver going forward. So I think we're getting to the stage of the market. And of course, this has been said many times, and it might not be true yet, but I think it's true that silver is going to outperform gold going forward.
Well, we will see. So far, it's been doing pretty well, and back above 30 is encouraging. It is a smaller market, but that also means it can move much faster. Do you care at all about exploration plays right now, Sean? Because out of anything, we can keep talking about the disconnect between the stocks and the underlying gold or silver prices, but it's the juniors still that haven't even moved.
I know. Well, and I know because I own them in my personal portfolio, but I'm not recommending them to subscribers at this time. That doesn't mean I won't. Like I said, I was looking at a exploration project generator play this morning that I'm kind of considering. We'll see. But at this time, I'm not moving my subscribers into it. It's still too early for that. But the junior producers, junior developers, the ones that have a path forward to production, this is the time to buy those. I mean, that's the kind of things that I'm looking at. We already own plenty of the larger miners. Now we're going to go into the smaller ones.
Well, just one more follow-up on the mining stocks, especially, again, thinking about the silver stocks, because they have a tendency to catch up. The silver stocks we had a decade or two ago had a lot of silver primary companies, and now there's so few of them. Most of the silver companies have branched out into gold, and some of the stalwart silver names actually have more gold production than silver now. Some of the newer development plays that are up and coming and near-term producers do have a nice mix of both silver and gold, but it's really hard to find silver companies that aren't mostly base metals companies, lead and zinc and copper. So how do you play it? Do you like having a hybrid of gold and silver? Do you try to find the pure silver plays? Are you okay with base metals in the mix? How do you look at that part of it?
Well, I have recommended pure silver plays, or at least they're pure silver for now until maybe some of their exploration projects work out, to ones that are mixed and like stuff like that. There's really no way around it. As you said, there are very few pure silver plays, and I can think of one of them that I really don't want to own right now, just because they have a habit of like diluting their stock for all sorts of reasons. So you have to be careful. So for me, it's really not so much on what they produce basis, but how the company is managed. Do they have goals they're working toward and hitting those milestones and like stuff like that? That's much more important to me. But I mean, you could always buy something like the SLV, which it tracks a basket of silver if you just wanted to do the pure metal. But I think you will get some nice returns in these smaller companies that they have a larger silver production than most, which means they are going to be leveraged to that metal as it moves. And as silver, I believe, outpaces gold, those kind of companies should do well.
So what about these companies that have the resource that their development plays? You've brought them up earlier in this interview, but ones that still need to finance. There's a lot of assets out there that would make money at these current prices. They just need the money to actually build the mine. How do you go about analyzing which of these are more likely to get financed? Which ones have the best upside?
Well, usually you can talk to these companies and they won't tell you exactly what they're doing, but they will give you what their broad goals are. Like, do they just want to sell out the asset? Do they want to do some kind of financing through a streamer? Do they want to issue shares? Do they want to get loans? Do they have a nice big pocketed friend that can invest in them and stuff like that? And so how they are going to finance is really important because honestly, the financing guys still stick it to these little miners every chance they get. I can understand why many of these companies are actually hesitant, why they're happy taking a go slow approach, because they'd rather not pay for the multiple yachts for the CEO of the finance company, So again, it really comes down to the company, but look into what they're saying, especially on their earnings calls or non-earnings calls in the case of an explorer or developer. They don't have earnings yet, but how they plan to go forward.
But Sean, we hear the same thing from every company. It's going to be a package. It's going to be a stream. It's going to be a royalty. It's going to be debt. It's going to be equity. It's similar for almost every company.
Right. Well, all right. You can also look at the track record of the CEO and the other major people involved in the company. What have they done before? Do they maybe work with the same group of people all the same time? Do they habitually get a nice big company to come in and buy them out? Because that's probably what they're going to do again. There aren't any easy answers on this, and I wish I could give you some. And luck is like part of it, as we all know. I mean, luck is such an important part in mining because that's where you go from proven to probable to measured to indicated, and once you get down to inferred, it's anybody's guess. I don't know what you have there, and you're just making your best guess yourself. So it's really kind of a thing. It just varies from company to company. I just say listen to these calls as often as you can, speak to them. And many of these companies are actually quite communicative. That's actually very nice. Some aren't. So, you have to take that with it. But just keep plugging. I wish I had a nice, easy answer on that. There is no easy answer. And so, that's just kind of what I'm doing.
All right, Sean. Well, I appreciate you sharing your thoughts on the precious metals complex and some of the companies all the way down into the juniors. Let's pivot over to another commodity sector that has been rocking and rolling in the month of September, and that is uranium and the uranium equities. After a couple months of pain, after starting the year with a bang and then having another rally up into May, the couple months that followed May, June, July, August, were dismal for the space, but September has been a turnaround. It looks like things on the ETFs, URNM and URNJ, have double bottomed and started bouncing back higher. They're above some key moving averages. Do you think there's some momentum here in the uranium stocks?
Yeah, that's the way I'm playing it. For one thing, I'm glad to see my uranium positions come back from the dead. That's always very nice, but I wasn't going to sell them because I knew the big longer term supply demand squeeze here, just meant that we had to be patient, which is always a tough thing to counsel to any subscribers. Just be patient, just be patient. And then they're thinking, well, in the long run, we're all dead. How long do I have to be patient? But yeah, I like what's going on in the whole uranium space, especially look at the junior miners. Right now, I would prefer the URNJ over the URNM because that thing just gapped high to a new high today and it's on higher than normal volume. That is a sign of something that, I mean, now it's still way down. It's below its 200-day moving average before we all break out all the party hats. I mean, it's still in, what would be considered bear territory. But in the shorter term time frame, it's quite bullish. And we have some nice uranium positions. Again, this is a thing where I like producers and also developers, those companies that'll have a mine in production in the next 3 years. That's the kind of thing I like. And there are some great names out there. They also have high risk. That mine might never materialize. That's always the frustrating thing about mining, isn't it? But I don't think you can avoid, or I should say, ignore what's going on in uranium right now. It's just really exciting. And it seems to be finally waking up for all sorts of reasons. And next year could be a great year for uranium stocks.
Do you have a preference between Canadian juniors or juniors focused in the US?
This group is so small, I don't think you can say, oh, well, I prefer this over that. I will take a great mine wherever it is, in the US, in Canada, or in Africa, or Australia. I mean, no, I don't have a preference for any particular kind of thing. It's an individual companies, but also, I mean, if you don't own anything else, the URNJ is a great place to start. Even if you don't buy the ETF, just look at the companies it owns because those are the ones that'll be racing higher as other people buy the URNJ.
It's a great point, Sean. The URNJ has a good list of companies in it. It's a well-constructed ETF, and people could do their own due diligence or just buy that ETF. Just one more question, though, on the small cap producers. Are you looking at companies that are guiding growth? Are you looking at maybe what their offtake contracts are? Because uranium's a strange market in that a lot of it's done with offtake agreements with utility companies. How do you decide which are the best companies to get your subscribers into?
I use a bunch of like fundamental as well as like technical analysis. So it's kind of a combination. Really, it's a small group. I want to own them all. I can't own them all, but I'm just going to own whichever ones look like they have good fundamentals, good prospects going forward, and technically speaking, they look like they're starting to move. That's basically what I do.
All right, Sean, always great chatting with you. Sure seems like there's a lot of opportunities you are seeing out there in the resource space, especially in some of these, I think, more widely followed commodities and resources. Plus, hey, the juniors, if they start to move, boy, oh boy, that'll make a lot of our listeners happy because, well, it's been a while since these juniors really took part in this rally, and everything seems to be there. The majors are moving, the mid tiers have done fairly well. Just more money needs to come into the sector and filter its way down, lifting all of these boats. Sean, thank you as always for your time. We'll chat again in another couple weeks. I hope you have a great rest of your week.
Okay, great, guys. Thanks.